So I think the role of FMIs in this intersection between traditional finance and tokenized markets and digital assets is becoming increasingly clear how critical it's going to be. So if I look at the role that we play already in terms of that bridging between the traditional infrastructure and the digital assets infrastructure that we do today as a result of the bridges we built between the SDX infrastructure and SIX, the CSD that we run here in Switzerland as SIX Group on the traditional side, and SSX, which is the Swiss exchange that we also run. So those bridges enable far greater distribution of a digital asset that's issued on SDX than if we were confined just to the blockchain-based infrastructure we have today. And as we add more market participants onto our blockchain infrastructure, that bridge will become less and less relevant, but it's going to take a long time to achieve this migration. So that will be absolutely critical for adoption, so that you don't have this friction when it comes to actually moving into the tokenized world, because there are significant downsides to you doing that. So removing the downsides to enable you to actually then embrace the technology, I think, is really important. And the same goes for the Bitcoin ETFs. They're a different way of approaching that. That reduces the friction that the institutional investment community has when it comes to investing in Bitcoin, because they can do so via a traditional route. So they can still deploy the capital, but not with not being hampered by having to actually adopt the technology. And I think those bridges are going to be in place for many, many years to come. I think the role of FMIs more broadly in tokenized markets is also becoming clearer and clearer. The obvious learning that we've seen as a result of a lot of the POCs that have looked to see what can be done with public chain as a settlement infrastructure have really highlighted the fact that in the context of achieving scale and distribution, but also scale and distribution in regulated marketplaces, you really need to have a neutral third party that's regulated, but who is not a market participant, who's not one of your competitors, to actually take what you're doing in a tokenization context. So if you're an issuer agent that wants to issue bonds on blockchain, for instance, you can take that and scale it up if you have the ability to enter a ecosystem that's being managed by a financial market infrastructure provider to distribute your instrument to a far broader community than just the ones that are represented by your direct customers. And also I think the services that are going to be operated for instance, trading and settlement, for secondary market trading and so on, those services again, for scale up, they need to be operated by a neutral third party. And again, it seems that we're reinventing what it means to be a financial market infrastructure provider in the context of blockchain and digital assets, to ensure that we can actually adopt and scale up this technology in a regulatory compliant fashion, in a safe and efficient manner.